Hello everyone. We'll be discussing the position size and its calculations. So let's begin. We'll be discussing the definition of basic terms first. What is an entry? Entry is the price at which your order is executed. In other words, buy or sell. Capital. Capital is the portfolio size, your account balance, how much money is in your trading account. Stop loss. Stop loss is an order to close a position to prevent it from further loss. While taking a trade, if you have put your stop loss, whenever it gets triggered, it will close your trade to prevent it from further loss. It is a lifesaver. I've explained this in the risk management previous video. Risk amount. Risk amount is the capital you lose on the trade if your stop loss gets triggered. For example, let's assume your capital is 1000 US dollar. You risk 1% on a particular trade, which is $10. So upon hitting the stop loss, you would lose $10. Simple basic math. $1000 your capital multiplied by 1% risk is equal to $10. I have explained in the previous video how much risk you should take per trade. Common misconceptions for newbies. Position size and risk amount are not the same. Many newcomers to the trading think that the position size and risk amount are the same. It is not the same. If your trading capital is $1000 and you're risking 1% per trade, it means if your stop loss gets triggered, your losses will be limited to $10. Basic math. $1000 multiplied by 1% equals to $10. In other words, you will lose only $10 if your stop loss is triggered. It does not mean that your position size will be $10. I'll be explaining it after this. Position size calculations essentials. We need three things to determine the position size. Your risk amount, how much risk of your capital you are taking per trade, your entry price, where you are buying or selling, and your stop loss. These things are mandatory for position size calculations. The simplest formula which I use is your portfolio size multiplied by risk you are willing to take per trade divided by stop loss, and you will have the position size. Simple is that. People have made this so complicated. Let's do a hypothetical example of the position size. Now, for example, your portfolio size is 10,000 US dollar. We have planned to risk 1% only per trade, which is $100. Our entry price is $14,650 and our stop loss is 14,177, which is approximately 3.23% down from our entry price. Let me share the chart with you. This is the Bitcoin and the US dollar 4-hour chart. I have taken the tool over here from the toolbox, the long position tool. My entry is $14,650 and my stop loss is $14,177. No need to calculate your stop loss percentage. Just simply go over here, take the long position tool, decide your entry price and your stop loss price, and you will have this. See, this is our stop loss now, 3.23% down. 3.23% down. So now using formula, capital multiplied by risk divided by stop loss. So what was our capital? Our capital was 10,000 US dollars multiplied by 1. We are taking 1% only risk per trade divided by our stop loss. Our stop loss was 3.23% as I have explained on the chart. So equals to $3,095 position size. Now this would be our position size on this trade. It's very simple. No need to calculate the percentages. Simply go to the toolbox, take the long position tool, entry price, decide your stop loss price, and here's the percentage. Just simply divide over here and you will get your position size. Now there is another method also, which is a bit of automatic. I'll be explaining that method on the live chart. Let's go. Now this is the Apple stock 4-hour chart. Let's assume our portfolio size is 10,000 US dollar. We would risk 1% per trade, which is $100. Our entry price is 108 US dollars over here. At the right side, you can see our entry price, 108 US dollars. Our stop loss is 106 US dollars, which is 1.34% down here. So using the simple formula, capital multiplied by risk divided by stop loss. Our capital is $10,000 multiplied by 1%, divided by 1.34%. So if we calculate this, our position size for this setup would be 7,462 US dollars. So this is how you calculate the position size. Now to automating the things after you have planned your entry price, your trade setup. Now this was just for example. I have taken the tool from the toolbox over here, and this is the tool. Now simply double click on this. You have to simply put your portfolio size and your risk size. Now let's assume our portfolio size is $10,000, our risk is 1%, and we have to set that OK. So you can see this quantity QTY 68. This means you have to buy 68 stocks of Apple. Now 68 stocks of Apple would cost $7,462. And in case if our stop loss gets hit, our loss would be only $100. So this is the position size. As previously I have told you that many newbies confuse risk amount size and the position size. They are not the same. Now, if my stop loss gets triggered, I'll lose only $100. And the risk reward for this trade setup, this is hypothetical example, is 5.94, which means my profit would be approximately $600 if my take profit gets hit. I hope you have learned and you have understand how to calculate position size. Try to practice it as much as possible. Still, if you have any questions, kindly do let me know.